Hey guys, Matt here. So in this week's portfolio update, we're going to talk about whether I think you should buy AT&T stock right now. Normally I like to get right into these videos, but I do have a few housekeeping items to get through first. So the first thing is that I'm going to be on vacation starting this Saturday all next week. Now I know AT&T has earnings coming out, I think July the 22nd. I think that's Thursday of next week, which I'm obviously going to miss because I'll be out of state. If I get back in time and things were, I get rested up and stuff, I should have a video out that Saturday with a portfolio update and my opinions on AT&T, but don't hold your breath. Now, either way, I will still show my portfolio update on Instagram, so if you're following me on Instagram, link in the description, you'll see my update for that week. The second bit of housekeeping, and this is a little unrelated, I've gotten some requests to do some consumer staple videos on, consumer staple stocks. That is in progress. I'm still in the middle of researching a couple of stocks I like, one of them being Kroger. But I should have a video out within the next couple of weeks on that, but we'll see how it goes. So, AT&T. Now, if you've been following my channel for a while, you know I have a whole playlist on AT&T. If you haven't, you can watch it up here, which I go all into AT&T. I've been following them and making videos on them for about a year or so, with my opinions as, things have progressed and whatnot. And the first thing I want to say about AT&T is that this stock is a pain in the ass to own. That's the first thing. I want to get that straight out of the way. This stock is a pain in the ass to own, but that's in my personal opinion. And like I said, this video is not entirely about me. It's whether I think you should invest in this stock. So the first thing I will say is that if you were looking at AT&T as a growth stock, if you're looking for a stock that's going to 10x your money, this stock ain't it. This stock is not going to 10x, in my opinion, in the next 5 to 10 years. Do I think this stock is going to 5x? No, I don't. Not at all. Do I think this stock is going to 2x? Maybe, probably not. Like, if you are a growth investor, AT&T is probably a miss for you. This is not the stock that you're going to get to shoot to the moon and 10x your money. No. Now, however, if you are a value investor or a dividend investor, and those two were typically go together, AT&T might be worth a look. Now, let's talk about it. Now, to start, let's take a look at its all-time stock chart. And this is all going to a point, but I want to we gotta go over some of the fundamentals of the business. Now, prior to 2015, AT&T was primarily known for cell phones. It was known for fiber, and it was known for internet. Well, in various stages as technology wore on, but it's mostly for internet stuff. So we see a couple of crashes here as the stock, rose and fell. This right here, the 90s and early 2000s, this was due to the dot-com bubble. So that can be explained by external forces. We see it rise again around up until 2008. This is due to the financial crisis. That can be explained. And then this little dip right here, this was due to the events of 2020, which, we all know what happened to that. Now, the period I want to talk about here, because this right here, externally caused, most likely, externally caused. This right here, which sparked the long-term gradual decline of AT&T over the past 5 years. This right here is not externally caused. This right here was AT&T getting in AT&T's own way. This period right here, and since then, AT&T has declined about 35%. So if you've been investing in AT&T for about that long, I fully understand why you are mad and why you may hate this stock. See, this is the time where AT&T decided it wanted to be more than just internet, more than just fiber, more than just, a cellular company. It started making purchases and taking on debt to make acquisitions. The two that come to my mind immediately are DirecTV and Warner Media. Now, DirecTV, I think we all know what happened to that. But if you don't, it just I mean, it didn't flop, but it didn't turn out so well. AT&T did not make their money back on their investment, and they took out a bunch of debt to do that. And if you look at AT&T's balance sheet over the years, you can see the debt sort of skyrocket. Now, this only goes back to 2017. Yeah, the debt sort of skyrocketed, and AT&T didn't exactly have the ROI to show for it. Now, Warner Media, I will say this: a lot of people may tell you that Warner Media was a bad investment for AT&T. And in my personal opinion, I don't think it was. Like, it may have started out that way, but Warner Media, I mean, that includes HBO Max, that includes Time Warner. Like, that, in my opinion, that was making them money. And I feel that was a welcome addition to set AT&T apart from, companies like Verizon. Because, for example, HBO Max, if we scroll up here, this is its investor update in March 12th. Like, HBO Max has been growing quite well. And right now, HBO Max is the only place where you can watch, like, silver screen movies outside of a movie theater. So if we take a look at a 5-year chart, yeah, AT&T has declined about 35%, as I said earlier. And that's mainly due to these, in my opinion, from my research, to these bad acquisitions. Like, if we take a look here, from a financial standpoint, if we take a look at the revenue since 2017, it has been going up substantially. Now, not so much in 2020, but, I mean, I'm not going to be mad about that. I mean, I'm not going to, gripe on, AT&T not performing the best it can during a pandemic. But other than that, the revenue has been shooting up. However, and let me find it here, the net income, the bottom line, has not matched that. As a matter of fact, it has been declining over the past couple of years. And that was due to all this overhead by these, bad acquisitions. Now, despite, Warner Media, in my opinion, actually turning up fruit. But, I mean, even then, in 2020, when everything got shut down, Warner Media wasn't, deriving as much revenue. So, at the time, it was it was more of a liability than an asset, in my opinion. However, now that the virus has ended and stuff, I mean, people are starting going back into the office. People are starting to shoot movies and stuff. I feel that Warner Media is on a comeback. That story brings us to the end of 2020 because a lot has happened since then. AT&T has made some substantial changes since then in order to try to turn itself around. Now, if we go to here, let me see if I can find it. Now, this we're going to talk about at the end because that's a major one. ATT, after I think in its final earnings report of 2020. It talked about its huge plan to pay down its massive debt. Like, if we look over, go here. I mean, if we take a look at here, I mean, its debt was pretty massive. We're going to talk about that in a second. But after doing that, AT&T took out some more debt in order to bid on the C-band spectrum. Now, I've already talked about this in previous videos, but the gist of all this is that AT&T bid on a 5G spectrum that the government was auctioning off. AT&T, I mean, despite taking out lots of debt, or because taking out lots of debt, it came in second place, a second only to Verizon. And to make a long story short, AT&T, because of this, now has the potential to have the second best 5G network in the country. Now, just this year, as a matter of fact, as reported in March 1st, AT&T has recently sold off their DirecTV business, which is very, very welcome, because that means they're going to remove a lot of unnecessary overhead. So that is very welcome. And this right here is the final part of my recap. This is the last big move that AT&T has made recently, and this was a big one. AT&T announced this $43 billion deal to merge Warner Media with Discovery. So remember, one of the two big acquisitions that AT&T made back in 2015 through 2016, 2017. I don't remember exactly when AT&T acquired Warner Media, but I mean, it looks like AT&T is finally trying to go back to the just the main cell phone and internet company that it was before, and it is very clear that that's what AT&T's goal is. Now, I All right, let's talk about the deal itself. I'll hit the high notes because there's a lot more to go over. Watch my previous videos, watch my playlist. I encourage you to read up on this. But basically, AT&T is selling off its Warner Media business, and it is merging that business with Discovery to form a whole new company. And AT&T is going to own 70% of that company. So that means a lot of debt is going to be wiped off the table with AT&T. AT&T is also going to receive $43 billion. And the bad part is that one of the big parts of this agreement is that AT&T is, presumably, if this goes through as expected, it is going to slash its dividend by roughly half. I think I did the calculation back when I made a video on it. Yeah, it's roughly half. So that was just a bit of recap, and that recap just hit the high notes. I recommend after this you do your own research as far as AT&T, as far as the history goes. There's probably a lot more that I barely even touched. Now let's get into whether I think you should buy the stock or not. Well, like I said, AT&T is a pain in the ass. I would definitely not recommend this as the very first stock you buy if you're just starting your own portfolio. However, I do think AT&T is worth it. So let's talk about a few things. Again, so as far as going back to their max, now before here, AT&T, other than we'll call it the crashes that had nothing to do with the company, before here, AT&T was doing really, really well. And this was until AT&T made these, we'll call them bad investments. Although I disagree with the Warner Media being bad. We'll just say investments that didn't pan out for AT&T so far. And when AT&T first announced that it was doing this, I was pretty mad. I made a video about, how mad I was that this is happening because the dividends being slashed in half. So anyone who invested in AT&T strictly for dividends is now going to get a cut. And I think now the cut's not going to last, is not going to happen until I think 2023. I think that's when the deal fully goes through. But as I thought about it since that video, I started to be more and more okay with it because although the AT&T is cutting their dividend eventually, they're going to have a lot less debt to deal with because right now, let's see if I got the right one. Let's do this quarter. Yeah, AT&T has even more debt than it did the quarter previous when it, said it was going to cut down all of its debt. So for it to divest a lot of its resources, it's, not performing businesses, I think that is very welcome. And so what I think is that although AT&T will be a smaller stock in the form of dividends, it will be a much safer stock to invest in. Now let's take a look at the statistics. Now, if you think AT&T is worth it, as far as value, undervalue, and remember, we're looking at AT&T from a value perspective. I think that AT&T is undervalued by a lot of metrics, especially its forward PE. It only has a forward PE of 8.94. PEG ratio isn't the best in the world, although it is getting better. But it's not the best in the world, but we're not looking at AT&T for a growth stock. Remember that. We're looking for an undervalued value stock that will pay out consistent dividends over a period of time and should raise in value. But as far as all these other valuations, it looks pretty decent. Now, as far as financials go, now one of the key things to a value stock is that the company does need to grow. I will be the first to admit that. Now, it doesn't need to grow at the rate that a growth stock is going to grow, but growth does need to happen. And despite the drop in 2020 and despite the drop in, net income due to its less than ideal acquisitions, it has been performing really well as far as revenue. And if you look at the quarterly basis, you do see it come back. You do see AT&T start to bounce back. If we take a look at its going back to its latest financial outlook, as far as fiber locations, AT&T has 3 million new fiber locations as of 2021. And this is a company that generates a lot of cash flow. Even with the drop in net income over the past couple of years, its cash flow has continued to shoot up. Now, despite everything I said about the bad investments and all that stuff, one thing I want to point out is that this is a very strong performing financial company. It's not going to have all the growth in the world because AT&T's been around for a very long time. It's not a company you're going to buy for growth, but it is very, very financially strong. and it's the company that's not going to go anywhere anytime soon. Now, as a dividend stock, let's take a look at the dividend stuff. As it currently has a dividend yield of 7.3%. Now, once the, I guess you can call it the merger or the selling of Warner Media goes through, this will probably be cut in half, which in my personal opinion is fine. It's going to lose its opinion. It's going to lose its position as a, dividend aristocrat or whatever. But for me, that's fine as long as AT&T becomes a more, we'll call it a safer stock than a, high yield but kind of high risk stock. That's fine by me. The 5-year growth rate isn't the best, but once it sheds its, we'll call it dead weight. DirecTV wasn't the best. Then I think AT&T is going to get a lot better over the next couple of years. But just if you are someone to whom being a dividend aristocrat matters, AT&T is going to lose that status this year because I don't think it's going to raise its dividend past 52 cents. So it will stop being a dividend aristocrat this year. So my final opinion before I go into my weekly portfolio update, because I know this is a long video, but I want to leave you guys something before my vacation. But my final opinion on AT&T, it's been a company, like, if you already own AT&T, AT&T has been a pain to work with. It's a company with a ever-changing business model. It keeps changing like I changed my shirt. But I do think it's a company that is trying to recover from its mistakes. Like, before 2015, it was a growing company. And I think AT&T is trying to get back to that. It's a very strong financially performing company. It's got a lot of cash flow. It's paying out dividends consistently. And it may not be raising them anymore, but it's paying them consistently. And as of 2023, when it, divest from Warner Media, I think that's a good term from it. Divest itself from Warner Media. I think AT&T will become a lot more agile of a company, and it can focus, 100% of its resources towards 5G and fiber, which are both doing very, very, very well. And I think AT&T is going to become a much, much stronger company over the next 5 to 10 years, as long as after that AT&T stops getting in its own way. That is a risk because AT&T has a habit of doing that. I will say that it does, as long as AT&T stops and does nothing after it, gets rid of Warner Media and just focuses on its business, I think we'll be fine. So to sum it up, AT&T, if you're a growth investor, I don't think you should be involved in AT&T. If you're into value play and you're very new to this, I don't think AT&T should be your new investment at all. However, if you've been investing for a while, you can handle AT&T being kind of a pain. I think AT&T over the long run will be very, very, very much worth it. And even if AT&T doesn't raise in value, even if AT&T stays between a $28 and a $35 range like it's been for the past 5 years, even if AT&T keeps bouncing between that for a dividend investor, that's fine by me because that means I can continue, racking up them dividends over a period of time at an affordable price. So if you can handle AT&T being a total pain, I think the stock might be worth it, or at least might be worth looking into. Again, not financial advice, just my opinion. Now let's finish things off by going over my portfolio update real quick. I don't want to take too much more of your time than I already have, but things are, a little worse this week. We got Gevo and Hyliion trailing the team. Like, both these stocks went from, I think, major losses to major gains back to major losses over the span of a couple months. But sometimes the market be like that. I did start pumping money fairly heavily into Gevo. I haven't touched Hyliion, and I'm not going to touch Hyliion. But like I said, if Gevo dropped below 6, I would start funneling more money into it, and that's what I've been doing. And I will keep doing it. I know Gevo has earnings next month. Hopefully, we'll get some good news out of it. Hopefully, we get some good news out of Hyliion when it reports its earnings next month. And the thing with a lot of the other stocks, I know I don't talk about a lot of them, is that's because I don't have to. Most of my stocks are boring stocks that don't get a lot of views on YouTube. However, I don't have to think about them. Like, I don't have to worry about whether Realty is going to, go bankrupt tomorrow. I know it's going to keep bringing in bank. Pfizer and Qualcomm, I don't have to worry about them. I don't have to, worry about, what's Qualcomm going to do next year? I know it's continued to make bank. Revolve, that took a hit. We are no longer 5xing our money, which is a crying shame. AT&T, still doing what AT&T's been doing this past several months, just hovering in between $28 and $30. Ever since AT&T has announced this, departure from, selling off Warner Media, has not been doing so well. But these other stocks, it's been doing pretty well. Cloudera, as you know, is going private later this year. Cisco, oh my gosh, Cisco. Like, I am very happy with the performance and the dividend payout I'm getting from this company. I am very happy with the performance. I've been pouring my money mainly in the Walgreens because it is overvalued, and if the market is stupid enough to let this stock drop, I will keep pouring my money into the stock over a long period of time. This stock is going to explode in the next couple of years. But anyways, take care, have a good day, and eat your vegetables.